Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar series, our endeavor to trigger a buy and to bring back consumer confidence in the real estate market. We have initiated a series of webinars and conducted by industry experts to give you all a crisp insight of real estate industry. The topic of today's session is how to compute the return on your property investment. Our guest speakers today is E. Jayashree Kurup, Head Content and Research Magic Bricks, and Puneet Kukreja, Associate Product Head Magic Bricks. Jayashree has been a business journalist for over 2 decades with the Times of India, the Economic Times, and the Financial Express. She forayed into research in 2002. She is a regular guest columnist with a number of established media, including the Times of India Group and others. Our second guest of the day is Puneet, who has been working with Magic Bricks for the last 5 years and have seen it grow from 1.5 million users to 9 million users per month. He is responsible for 80% of product initiatives on web, M-site, and mobile apps. He has worked on dozens of mission critical projects on both web and mobile. Such as complete UI revamp of entire site, launch of various products such as advice section, search on map, GeoHF, search algo, new projects dictionary, apartment selector, etc. Now we will start the session with a presentation by our experts. The presentation of this session is made by Ayush Kad, Product Manager, Magic Bricks. Over to you, Jayashree.
Thank you, Neha. Welcome, ladies and gentlemen. Welcome to the Magic Bricks webinar series. This is our effort to make sure that we demystify property investments and so that each of you gets the best returns on your investment. And today, that's exactly what we're talking about. No matter how good a professional you are, you may be a financial consultant, you may be advising global organizations on how to make money, but when it comes to buying that house for yourself, there are so many queries that you would like to ask. And in the absence of a advisory system, a formal advisory system in the Indian real estate market, Magic Bricks has taken it on itself to provide you a lot of tools that allow you to make your own property investment with your eyes open. What do I mean by this? You need to know the values. You need to be able to figure out whether you're paying the right value for your property. You also need to know about the developer. What are the antecedents of the developer? Does that developer really have a track record of delivering good quality property on time, every time? You also need to know whether the house that you've selected, what kind of prospects does it have? If you may not necessarily be buying it to stay in currently, but if you are a future end user, you would also like to know what kind of return you can get on your investment. All this is very critical if you want to make the best out of your real estate investment. And increasingly, real estate has become an asset class, very like the stock markets, very like gold bonds and so on. And we would like you to treat it as a proper investment where you have a lot of research material which you could use to make the right decision. So over to you, Puneet. Puneet, would you like to talk about why Magic Bricks started the advice section at all and what we have in the advice section?
Sure. Thanks, Jayashree. Good morning, everyone. I've been working here for the last 5 years now, and as most of you would be knowing, we get more than 10 million visits on the site every month. So essentially what this means is that more than 50-60% people who are looking for home on the ground, they are coming to Magic Bricks, and they are leaving a lot of their footprints on MB in terms of what they are looking for. And from seller perspective also, so 60 to 70% of the inventory which is available on the ground, it's there on Magic Bricks. So with this amount of data, and we are in operations for last 8 years, so we have been able to assimilate so much data from the ground, from users, from whatever they behave on the site, that we are always able to calculate supply, demand, and a lot of other kinds of trends. And we spend considerable amount of time in user research to understand what kind of pain areas do they have and what do they need actually. Real estate being such a hyper-local entity, there are a lot of user segments. So essentially there are, so a person who is buying in New Delhi might have very different requirements from a person buying in Bangalore. Investor behaves very differently from a person who is looking for resale. And there were a lot of certain queries which made us create a section, property advice. Now it was comparatively much easier for us because we had a lot of user information, lot of information from the supply side also. So what our advice section does is, so in last 8 years, whatever data we have captured for top localities and projects, when I say top, around top 3,000 localities in India and close to 10,000 projects in India, we are able to very clearly tell you about the how the demand has gone in last 2 to 3 years in terms of supply, what is the current supply available, and if you have to put it on rent, what is the kind of rental yield you can expect, and what are users talking about it. So we tried to aggregate all this information in just a single platform so that end users can take an informed decision. Apart from, we also launched a lot of financial tools to help users take decisions, because when we talk to users, they did not know, in fact, if they're investing 80 lakh rupees, should they buy two 40 lakh houses, or should they invest in 80 lakh in one particular locality. Apart from it, if their current salary levels are, say, they are earning close to 1.5 lakh per month, so how much worth of home should they buy, and what are the other charges which are actually hidden. So all these kind of things were put together in a single platform called Advise, which will help users bring some transparency in the system, and they should be able to evaluate each and every property. Now recently,
Okay,
we got a lot of
now
user
if we talk about the return on investment calculator, specifically about that we're going to be talking about today, would you like to give a small brief introduction to that calculator and what the consumer
sure.
needs to bring to the table?
Yeah, thanks, Yashish.
Yeah.
Sure. So when we talk to users, so in fact, I was talking to one particular investor and he told me that 5 years back, he bought a property for 1 CR, now it is 1.5 CR. He told me that he has got 50% return on investment. I told him you are wrong, because ultimately there are a lot of other factors which impact. I mean, you should not see it as just 50% increase. There are a lot of other things which should be taken into consideration when you say 50%. The ROI is close to 20%, because you have not taken into consideration the kind of interest which you have paid to the bank, the kind of taxes which you have paid, and there are a lot of other stuff. So what ROI calculator does is it takes into consideration dozen of other parameters, not just the current value and final value, and it tells you what the actual return on investment is. For example, for that particular investor, when I calculated using our ROI calculator, instead of 50%, it came out to be 20-25%. And actually that opened his eyes, and he said yes. Ultimately, in fact, he was assuming that it's a 50% increase. It was actually a 20-25% increase for him. So all these kind of
Shall
scenarios.
we go on to the presentation now?
Yeah. So now I'm handing over to Ayush, product manager, who developed this tool and who got this developed internally. Ayush, now handing over to you.
Thank you, Puneet. So hello everyone. I'll be taking you through what this calculator actually is all about. So what is return on investment calculator actually is? So it's a tool, as Puneet correctly mentioned, which will tell you how much actually you have earned on your investment. It will take into account the annual inflation, which is, I think, the best comparison tool that we have right now, because what you consider as example, what Puneet said is like 1 CR and 1.5 CR. The money that we have initially put down as a down payment or as a complete amount has also changed over a period of time due to inflation. The value of money changes. Interesting concept, but yes, it changes over a period of time. Also, there are other factors which are considered, like whether the property is on rent or not, whether you have taken a loan or you have put down the entire cash. So all these factors are considered. You will be given a simple form to fill, and basis that the ROI against inflation will be given. The ROI means return on investment. So I will take you to the next slide. Basically, how is it calculated? So as I mentioned earlier, there will be some basic parameters which you will be asked to share, like what was the purchase price, what is the amount of loan if you have taken a loan, what are the terms of loan agreement. These are basically that what kind of rate of interest you have agreed upon, what kind of tenure you have agreed upon. Then you have the rate of capital appreciation. Then you have the income generated from the investment, such as the rental income, if the house is on rent. So many cases, people buy properties which are ready to move, and they buy it for the basis of regular monthly income. That's why this is a very important parameter. And then last parameter would be annual inflation. So as I mentioned, inflation is the best parameter to compare. I'll take you to the next slide now. This is a very simple block diagram of how it is calculated. So I want to introduce two concepts here, which is the current value and the future value. So when you have bought a property, say a certain time period back, say 5 years back, the amount you paid then will have a different value in the current scenario, maybe 5 years from now. So yes, the amount that you paid, maybe one CR, that's what example what Puneet earlier took. If you have spent 1 CR earlier, that amount might have moved up to say 1.3 or 1.4 CR because the value of money has changed. That is because of the inflation parameter. Now we all understand that inflation is a basic buying capacity that you have. You are buying something today for 10 rupees, that will move to say 12, 13 or 14 rupees in the coming few years. That's so the same thing is at a different price sometime after some time from now. So that is what I am coming from, which is the value of money, which has changed over a period of time. So what we have done is there are the certain payments that we have done earlier are moved to the current value. So we have changed those values. Suppose you have taken a house on loan. So you have paid certain EMIs, which have certain interest and certain principal components. Everything is shifted from their particular time period to the current time period. And that's why the value has changed. So these are the payments that you have done, are like down payments, the EMIs paid, the purchase price after annual inflation. This is the price of the property. So if you have bought a property of 1 CR, had you bought the property now, the price might have changed to 1.3 or 1.4 CR. So as Puneet rightly mentioned, that it's not a case of 50% increase in 1 CR to 1.5 CR, because the property price would have also changed right now, and the value of money has also changed right now. So everything is got to one level.
The consumer needs to put his input price, how much was the purchase price, how much down payment, and how many EMIs have been paid. After that, the calculator will compute the current value, right?
Right. So I can take the user to the screens, basically what he has to enter. That's an example that in the next screen. So so Jayashree, as you mentioned, these are the inputs that the user will be given. So I've taken a very complex scenario which takes care of all the scenarios, considering you have a loan, considering you have a rent. So this is what the screen will look like. If you will go on MagicBricks website, this is how the calculator will look. So user will enter whether the property is taken on loan or cash, whether property is on rent or not, and if yes, on how much rent, whether the purchase, what is the purchase price, what is the down payment, and what are the loan terms and conditions, the purchase date, and what is the current price of property. This is the market information which the user has to share with us, that this is what he thinks the current price of the property is. Now, annual inflation is what we can modify. If the user, I mean, though it's a figure that we have already input, if the user feels it's a different value, we can modify that. So this is what the user.
Ayush, may I interrupt you here? Suppose the consumer knows only his purchase price and is not aware of the current price of the property. Can he not use the calculator?
So, ideally, no, because he has to input some kind of value that he thinks of the price, property price right now. In phase 2, we are.
So, consumers, I would like to interrupt here and say you can go to the rates and trends section of MagicBricks advice, and there, if you put in the your property values, your property sizes, you will be able to figure out what the current price of that property is, more or less, in that locality. Pick up any price that you think is your property fits into, and put that as the current price of the property. Because remember that you know the purchase price, you know the down payment and the loan tenure and the rate of interest, but when you want to compute the use the ROI calculator, you also have to have an estimate of the current price of the property, right, Ayush?
Correct. So just to take this thought forward, in phase 2 we are integrating that particular feature with this calculator. So then users will not have to go to the separate section and come back to this section. Our intelligent calculator will automatically give them the estimate current price of the property. That is soon to be launched.
Okay. As of now, you need to give an estimate of the current price of property, but going forward, the current price of the property will be auto-lifted from the MagicBricks database. Please go on.
Correct. Okay.
Go on.
So I'll take you through how after user enters all these values, what we do at the backend. So the next screen will show that what are the interim calculations that we have done. So as I was saying, if you see, difference in the property price is not 50 lakhs. This is because user has already given some kind of money already, of which the value has changed over the period of time, and as per the current value, it comes out to be 39 lakhs. He has paid certain EMIs, of which they are components of principal as interest. So interest paid is a direct cost. It is not going into the value of 1 CR, which is the agreed price of the property. So that comes out to 32 lakhs, but this is also the current value and not the actual value paid by the user. Now rent earned is 16 lakhs. Now when we say 30,000 for 48 months will be lower, but the value has changed, that's why it moves to 16 lakhs. Total variation, if we see a simple mathematical calculation, comes out to 23 lakhs. Now, when we see the total current value of the total payments done, it's actually close to 1.2 CR. This includes all the payments of the principal part as well as the down payment part over a period of 5 years. Say. So now we do a simple division and we get a rate of interest of 19%. Now, many people will think why? It's 1 CR, 1.5 CR. It's not a 50% jump as Queen rightly mentioned, because they miscalculate the total money earned and they forget about the current and the future value concept. This is the most important thing which we want to tell. Please on.
Yeah. Yeah, carry on. Ayush, finish your thought.
So I was just saying that this is where it comes as a shocker to many people because they are expecting something that we have paid. Again, the same example, 1 and 1.5 CR, 50% ho gaya, and now we can actually go and sell the property. But had they put the money somewhere else, had they used the money for some other purpose, they also would have earned some kind of money. So they fail to forget those kind of reasons in their mind, and that's why they.
Yes, Ayush, may I a little thought here. Consumers, if you've seen what we've put in this, the difference in the property price between what you bought and what you are selling now is 39 lakhs, assuming that you bought a property for 1 crore. The current value of the interest paid has been computed. But remember, one important component that is there is the rent earned. If you purchase a property and keep it locked up, you are losing this rent earned component, and the return on your investment, what was 19%, can come down dramatically to a much smaller return on investment. So when you're figuring out whether you should actually just hold your property for whenever you want to use it, or whether you want to allow it to earn for itself, this calculator will actually help you understand that without that rent earned, what is the return on your investment, and if you get regular rental returns, what kind of return on your investment you are getting. This actually is an eye-opener to a lot of people. Please continue, Ayush.
Okay, so I will take through to the next slide, which actually compares ROI and inflation, and this is a decision-making phase. So while this calculator gives you some numbers, hard-hitting numbers, as you correctly mentioned, but then there is some manual intervention also required. So, for example, if the ROI has beaten the inflation and it meets the expectation of the user, because every home buyer has a certain expectation of money that is going to earn on the investment. So yes, he thinks it's a good time to exit. Exactly, he should exit. But if he thinks that this has further capacity to earn more money, he should hold. So here comes the manual intervention I was talking about. On the other hand, if suppose it has not yet beaten the inflation and the user thinks he should wait for some time, yes, it's a good scenario, but thinks that the prices are further expected to go down, then he should ideally exit and buy it in a later time. So these kind of decisions the user has to take on his own, but our calculator will enable basis the numbers exactly what he has earned right now, what he might earn after some period of time if he enters future values. So those numbers we can get from these, but decision the user has to say. That's why market sentiments. Please go on.
Yeah, go on.
So the market sentiments and the owner's holding power plays an important role. So not everybody has the same holding power. There are some people who invest, who are very safe investors, and they have all the money for one particular apartment or a property that they want to buy. and that's why they have huge holding power. They are not exactly concerned with the prices going up or going down. They know that they can keep the apartment with them till the last moment. And then there is another kind of investor who has a higher risk appetite. What they do is they invest in multiple properties, and they, in the expectation that the prices will go up and they will earn the difference soon. So their holding power is generally low. So that's why there are different kind of investors in the market, and that is why each scenario is different. That is what I wanted to highlight from this particular slide.
Right.
Other than that, market sentiments is also a very important criteria here. What market is going to move? So there is actually not one parameter. You have to understand the demand and supply of a particular geography. You have to understand how the economy is moving, and are people totally into property, investing into property, or is like they want to get investing in some other things. So these kind of market sentiments, user has to be totally in, and they have to go through, keep on reading a lot, which will help them understand how the market is going to move. This knowledge will also help them. This knowledge will also help. That's all. So Jeffrey, I think this is what we wanted to tell. That's how you can get return on the investment.
Okay, we've got a very large number of users who are asking the questions, and we've got both Puneet and Ayush here to help you through your answer your questions. There is Kuljit BK Singh who says, I want to buy a residential apartment or plot in Faridabad. What areas or sectors will give good appreciation in the next 5 years? My budget is rupees 20 to 30 lakh. Now remember, here Kuljit wants to has a 5-year horizon, has a 20 to 30 lakh budget, and he wants to know whether he should buy an apartment or a plot. Multiple queries, but can the calculator help him understand this? Ayush?
Okay, so I'll answer this. So probably what he can do is, so as Jashri you rightly mentioned, so basis the current prices of plots and apartments, he can just fill in the value. He will get to know the current within his budget 20 to 30 lakh rupees. So what will he get in Faridabad and in which locality? And basis that he can input the price either for flat and plot, and basis that in terms of appreciation also he can see the past price trends of both plots and apartments separately for Faridabad, and basis that he can put the future value what MB is estimating, and basis that we will be able to tell him he will need to do 2 calculations if he is confused between flat and plot. So if he does both these calculations with this calculator, so this is the outcome, then he will be able to decide whether the outcome from flat is high or from plot is high.
Puneet, how does he figure out whether what the return will be in 5 years? How will he do that?
So essentially the current value he will get to know from rates and trends and the expected price. So in the expected price of property he can input basis. So we also show, apart from the current price, we also show the past trends data, which also tells user so what he can expect in say next 3 years to 5 years. So the expected price of the property is something which he can input in this calculator. So once these two are inputted, rest everything remains standard per se, like inflation does not move much considering the past 3-4 years of trend. And since it will be under construction, so rent per month would be 0. And rate of interest in case he's taking a home loan, he can put in 10%. So putting all 3-4 parameters, he will this calculator will throw up a value which will be return on investment. So first he will need to input all these values for plot and then for flat, and basis the outcome he can decide.
Right. Consumers here, you have to understand that there are 2 things. A plot does not give you a rental return because a plot is something that there is no built up property, so you don't get a rental return. An apartment gives you a steady rental return, especially in those localities where there is rental demand. Therefore, when you make your choice, you have to factor this in because rental return is a significantly impacting element in the calculator. The second thing is that nobody can predict what will happen 5 years from now, but by using what is known as a time series method, you are saying that in the last 5 years what happened, more or less one would say that in the next 5 years, despite market cycles changing, more or less that trend continues if you hold it for a long period, which would be 5 to 7 years. Now, in 5 years, what will happen? And Kuljit, you have a 5-year horizon, so you will be able to compute what can happen in the future basis past trends. This does not mean that it will actually happen, but it is one way of predicting the future. Let's go on to the next question. We have a question here. How can we calculate the rental yield if we invest in properties in Pune now? Will Pune be lucrative options for investment? Puneet?
So rental yield, we can actually calculate, it's just the total rent earned over the price, right? Over the period of 1 year. If also a user can go to a rates and trends section, there they will actually find the rental yield of locality of a projects that they have in my mind. So just log into advice.magicbricks.com, go to the rates and trends section, and you will find all this rental yield as well as demand, supply, and the time series graph that you're talking about.
Right. You should also remember, consumers, that Pune has more or less topped, along with Bhubaneswar, the list of smart cities. The government has released its first list of smart cities, and Pune and Bhubaneswar are right on top. Now, what does this mean to the average consumer, and what does this mean to your return on investment? A smart city is one where the government is investing money into making the services of superlative quality so that your quality of life improves. When this happens, you will find that as the quality of services improves, the value of your home, the unit that you have invested in, actually goes up. At a city level, when there is a effort to become smart, each locality in turn benefits. So while you look at the overall city parameters, you should also consider what are the infrastructure inputs that the government is giving. This would be in terms of water, power, sewerage, drainage. That means that you will not have to contend with waterlogging. You will not have to have huge storage facilities because the municipal services are weak. All that is taken care of in a smart city. It also means that the government will be investing in roads, flyovers, metros, and so on, so that transport connectivity from whichever locality you choose to the major business hubs or the entertainment hubs are ensured. Now, these things take a little while, so it will take about 2-3 years for or up to 5-7 years for the infrastructure projects to come. But remember that after that period, the quality of your life will go up, and so will the return on your investment. So when you ask, should I hold it for 5 years and is it a good investment option, any city that has been picked up for a smart city means that the government has enough money to invest in infrastructure and could yield much better returns in the future. Let's go on to the next question. There's Srinivas from Hyderabad who says, how to calculate the resale value of a flat which is 5 years old? How do you compute that? Puneet, this is a very critical question because today the number of sellers in the market, people would like to sell their old property and upgrade to new property because the values have been flat for 2 years and there is a lot of stock in the market. Resale value of an old flat?
Okay, so per se, this calculator won't help much because ultimately, I mean, you're asking a very different question. Resale value of a flat will, so essentially you would have bought this flat at a certain price point. And again, I'll say the same answer which Ayush had suggested. You go to the advice section. So if your flat is in XYZ project in Hyderabad or in a particular locality, you just see the current price trends. So our project price trends are close to 95% accurate. What actually are the prevailing price of the market? So essentially what you go there, you see the project price trends, select your project, or if it's a locality, select a locality, and you will get to know price per square feet price. So there, whatever price is being mentioned, the resale price is comparatively 90 to 95% of the price which is being shown over there. Because most of the properties right now which are published over there would be new, and per se the price of new property would be say 5 to 10% higher, but resale would be close to 5% lower of what is being shown over there.
Right. Important to understand, Srinivas, that when you have to calculate the resale value of a flat, there are two or three inputs here. One is how old is your property? You've said it's 5 years old. In any property that is 5 years old, there are two elements that impact it. If you have bought into a locality 5 years ago that was in the early stages of its development, you would have bought at a much lower value than it is today. If you have bought in at a very high rate, for instance 2006-07, when the markets were peaking, you would have bought at a very high rate. And therefore, today the return on your investment may not be that much greater than if you had bought when the market was at a low. These are some rules of the thumb. When you buy in the stock markets, don't buy when the markets are, when the Sensex is up. Buy when the Sensex is down, so that you get more bang for your buck, so to speak. But if you compute the value of your resale value of a flat, remember that if you are benchmarking it against new properties may tend to fetch better values than otherwise, except when it is in premium localities that have become premium today and where there is huge demand because it is close to commercial hubs or entertainment hubs and so on. So do use Magic Bricks creatively. We are showing you one tool, which is the ROI calculator, but Magic Bricks has so much more advice to give you. Go check out what the locality values are. Input your size of the property and the price you pay and the price you would like to pay for it, and you will be able to get a series of options and check out what your value is. This is one very good way of benchmarking the value of your old property. We've got Shrikant from Pune who has somewhat similar question. How to calculate the total cost of a resale flat for Rahatni in Pimpri Chinchwad Municipal Corporation area of Pune. Now, Srinivas wanted to sell, whereas I think Shrikant wants to buy. And he wants to buy a resale flat in a certain locality. Again, the same logic holds. Puneet, would you like to take Shrikant also through it?
Yeah, actually the same logic holds true. So, I mean, this tool won't help much, this ROI calculator, because this is something where you have already invested in and now you want to look for it. Just go to advice.magicbricks.com. There is a section called rates and trends. And if you have invested in a particular project, just select a project over there. And if it is not a project, it's a non-project property, then select a locality and you will get a range of price per square feet. And if you're planning to buy a property, completely new property, the price which is mentioned over there would be absolutely correct. And if in case it's a resale property, you can expect a 4 to 5% lesser price, because per se it will be by an investor and you can get a better price in resale as compared to new property.
Okay, we've got Bhadresh, who's an NRI, and his question is about the Ahmedabad market. He wants to know what returns can I expect in the next 5 years if I invest in Ahmedabad, which our ROI calculator will help. But he's saying, considering the devaluation of Indian rupee at current trend, remember that for an NRI, the rupee devaluation is a big significant impactor. So he wants to know how he should connect the two. Puneet, do we have anything that can help him?
I'm sorry, right now we have not taken that into consideration. It is mainly meant for Indian audience, but definitely it's a good input for us. So definitely this rupee depreciation should be, I mean, specifically for NRIs, this makes a big difference. So even if the rupee depreciation is close to 8 to 10%, it will finally impact their investment and it will have big impact on the ROI. So probably in the next version, we'll definitely try to, I mean, incorporate this input, but we are sorry, right now we don't have, I mean, this provision in this calculator. But this can definitely be built in. I mean,
sure. Bhadresh, we are holding out a promise that in our next version of the ROI calculator, we will definitely take your input and put element, the rupee devaluation element, so that NRIs can compute too. However, if you have this query and you want an answer to this, do write into our forum. We have a forum.magicbricks.com, where you could post your query, and we'll be happy to get experts to answer it offline, and we'll be happy to send you the answer. You can expect some reply from us in the future, and we will definitely take your requirement into account. There is Nishant Tapas, who is looking at Bhubaneswar, and he says how to calculate the actual price of a flat in Bhubaneswar, which is what we've been talking about, and what to look for when we go to buy used property. Puneet, he's asking about what are the elements that he should look for that can impact property values.
So essentially, first of all, if you're buying a new property from a builder, you should definitely check his background, read about builder reviews, project reviews. On our site, again, come to advice.magicbricks.com section. You will get a lot of information about people talking about a builder, people talking about a project. That is number one. Definitely, number two would be around, I mean, you would have some kind of construction quality in mind. So just get that checked. And in terms of, if you, I mean, there is one more thing, important thing. I mean, there is a book written by Jayashree in which you can actually get to know all the things which you need to take into consideration while buying a house. So the important part is, I mean, if you have certain kind of construction quality in mind, certain kind of legal or taxation thing in mind, just go to different chapters in that book and read that out, because ultimately there are close to 20 to 25 different things, a kind of checklist which you need to keep it very, very handy when you are evaluating each and every property. So that checklist, it's I mean, a really, really good tool, and I think we got very good response from the market that people using that particular checkbook, I mean, are finding it very, very easy to evaluate a property objectively rather than being a very, very subjective decision. So you just use that book, follow the steps which are mentioned, and I hope you will be able to find the right property. Definitely, you can also do one thing in case budget in the mind. Yeah, if you have a certain budget in your mind, you can use a smart search tool from us. So essentially, you just write down Pune and the budget which you have, and on the map, heat map, it will show you the localities where you should invest in. Suppose you have 60 to 70 lakh budget, just enter Pune 60 to 70 lakh, and in the smart search tool, click over there, and on the Pune map overall, it will highlight localities and will tell you, I mean, where you should invest in, very, very objectively, and then you can compare those localities with the help of compare localities tools, and then you can take a decision, I mean, where you want to invest.
Right. Consumers, we've shown you one tool, which is the ROI calculator. We promise you that we're coming back to you again and again with various tools that Magic Bricks has evolved, and taking you through how to use these tools. Like Ayush and Puneet have been mentioning, we have a rates and trends tool. We have a smart search tool. You can search for your property on a map, so that visually you can figure out what kind of property clusters there are for you to use. And these are all important. And like Puneet mentioned, we have put all this together as a book called How to Buy a House. This is printed by HarperCollins, and this is available on all the major retail outlets like Flipkart, Amazon. It's on the bookstores. So this is the reason why we put this book together, was because buying a house has become a very tedious process, and we thought if we could simplify it by identifying different processes and how you should use the book. The book takes you through each step of that process, and so that home buying becomes a pleasurable activity for you. Also, Nishant, I think you did mention that you were looking for used property, and what Puneet said holds for used property as well. Check out the developer who has built that property. Check out other projects by that developer and how it has been maintained over a period of time. Especially when you buy second-hand property that has already been in the market for 4 to 5 years, you must remember that there is a series of checks that you have to do. Let me quickly take you through a few of these checks. One is, how is the overall the unit maintained? That unit, does it have seepage, leakage? Is there are the quality of the walls good? Is the quality of the woodwork and so on good? These are important things to consider. The second is, does the whole apartment complex look good to you? Is it maintained well? Are the lifts in good working order? Is there a good backup facility? Is the landscaping good? Is there are common areas well maintained? And what is the neighborhood like? All this matters when you start staying in that place, especially if you're looking at it as an end user. Now, what you said is, how do you calculate the actual price of a flat? Go to the Magic Bricks and put in, go to the Bhubaneswar section, put in the size of the property that you want to look for, and you'll get a whole series of options. That more or less tells you what the price of property is. It has both new and used properties. That would allow you to compute what kind of values are present in the future, in the current market. There is Nupur who has asked, how can I use the calculator to calculate ROI for future purchases? Please suggest. Now, she has not bought, she has not got a rental return, but she wants to figure out whether she should enter the market and what kind of return on her investment she can compute. Puneet, can you take her through that?
I'm handing over to Ayush. I think he will answer this question.
So for this thing, yes, definitely. So Nupur knows the purchase price, and she knows whether she wants on loan or cash. So she can enter those details. So one detail again where she would be stuck would be the property price, current property price. So here she needs a certain estimation. So what we answered to our previous 3 or 4 listeners was how to know the property price. Again, they can go to the advice section, check out the current homework, what they have in their mind. Basis that, and using rates and trends, they can extrapolate and seek a future value. This is, I think, a very important scenario which Nupur has brought up, to use this calculator for the future investment. You kind of compute and basis your expectations, give a future price, and this calculator will function with equal efficiency and give you a return on investment. But this time it would be an expected return on investment. But considering only the scenarios that you have put up here in the presentations, this calculator should work beautifully there.
Right. We've got Mr. Rastogi who asked, how much is a good ROI? Would either of you like to advise him? What kind of return can you expect on your residential property?
So actually, it's totally very subjective. So there are investors who, invest money, and ultimately it totally depends on, what kind of alternate options do you have. So if you put your money in FD or some other instrument, you can expect 8 to 10%, and then you compute with real estate. So if you have to relatively define what is good for you, you just need to evaluate options other than real estate. So you talk to your advisors in mutual funds or some other instruments, probably some other investments in trading, and you just know, from our side, we will be able to tell you in real estate, this is something which you can expect. And if you believe that there are certain instruments where you can expect a better ROI, but again, totally depends on your risk appetite also, real estate being comparatively lesser in risk as compared to mutual funds and other instruments. So it's a function of risk appetite as well as, relative performance of other assets which you have.
Right. Mr. Rastogi, you would have heard the RBI governor say some time ago, in a country where the return on your real estate investment is roughly about 2 to 3% or 1 to 3%, is it a good investment category? Now, this is where your knowledge will help. If you buy into any property that is steady in the market, standing in the market, you buy it and you would get roughly about 2 to 3% returns out of your real estate investment. But this is why you need to know when to enter the market. If you're going to buy it for self-use, please do not look at return on your investment. It is an emotional decision. You have to stay in that property. You have to look at the quality of the neighborhood. You have to look at the convenience of transport access, and you also have to see how long you want to stay in that property. You also have to see how much your commute time is and so on. So it is an emotional decision, and it is not driven by ROI. So everybody does not need to figure out what the return on your investment will be, because it is something that you buy and you use. Now, if you were buying a car, would you say, how much will I get when I sell it? Of course not. You would look at why you're buying that car and how long you would like to use it for. And yes, you would like to know that it has a resale value when you don't want that car and you want to exit it. Similarly, if you're buying a house for self-use, return on investment is only good to know. It's not the defining character of your purchase. On the other hand, if you are actually entering as an investor, don't be emotional about your investment. You have to buy in the early stages in a locality that is not yet peaked, where the values have not yet peaked, so that you would be able to invest a smaller amount, and you know that properties tend to appreciate. It's like this. When you buy at the launch stage, you get the initial investment, the discounts that are inaugural discounts that are given. You also know that at every stage of the property, the value of the property keeps going up. By the time the possession happens, at least 20–30% rise in property values have happened on an average. This is a rule of the thumb, but there are individual variations. So please check out how the markets have performed in that particular locality. That's where the rates and trends will help you. The calculator will help you. The second thing that you have to remember is that markets go down and then markets come up. But if you have decided that in 5 years I want to sell, remember that in 5 years, in that 5th year, the market may not be rising. And real estate is not a liquid asset. It has to, you have to hold it. It takes a while to sell. So if you're looking at quick exit, real estate cannot be your means of investment. But if real estate gives you very good returns, if you have been sensible in picking up a property that has good infrastructure coming up and so on, so that when you want to exit your property, which takes about 6 months for you to find the right buyer, that is the period when you should look at good returns. This is how you compute your returns, and the steady average is 2%. If you want to beat it, you have to take other cases into consideration. Niharika has asked, Puneet, what other calculators do you have? Where can I access this calculator?
Okay, sure. So we have more than 7-8 calculators apart from ROI calculator, and you can again go to advice.magicbricks.com. There is a tab called financial advice. Just click over there, and there are 7 more calculators. So first one is home loan eligibility. For example, you are about to buy a house and you don't know, I mean, what is your affordability level. So just input your basic details like salary and everything, and we will tell you. I mean, we will suggest you. This calculator will suggest you what kind of house you need to purchase within what budget. That is number one. Number two is EMI calculator. You have just purchased a property or planning to purchase a property, and just input certain values and we'll tell you the monthly EMI. Number three is a very important one, in which a lot of users use, is the prepay your loan. For example, there are a lot of users who want to prepay something. For example, does it make sense to prepay the loan considering the interest levels or the interest which you have already paid? So that is very important. In case they have adequate cash with them to prepay the loan, or they can invest somewhere else. So this calculator tells you, answers the question whether a user should prepay the loan or not. Number four is whether you should switch your home loan. Now, people who have taken the home loan, they get a lot of calls from other banks that they will now get on reduced interest rates. So just the impact of rate change, whether, I mean, it will impact or not, whether when they switch from say one bank of SBI to HDFC, whether it will help them and in what sense it will actually quantify the benefit. And then they can easily evaluate whether they should switch or not. And the next one is buy versus rent. Now this is again for a segment of users who are not very sure. People who are not into real estate, they have money but they are not very sure whether they should invest in real estate or they should stay on rent for life. So just, I mean, and this calculator is used very, very heavily because people are in doubt. They have money but they are not very sure whether they should invest or not, and they are very much open that they don't come with a conventional background or feeling that they should own a house, and they are perfectly comfortable living on rent also. So they just want to know whether in the next tenure of 20 to 30 years, whether buying on renting makes sense or not. And the last one is home worth calculator, in which you just put down few parameters, attributes of your property, and this calculator tells you about the current worth of the home. This is mainly useful for sellers, but at the same time buyers also, when they are going to buy a property. So whenever they are seeing a property, they can just use this calculator to understand, I mean, what is the current ask price for this kind of property on MagicBricks, so that they can evaluate whether they are buying at a higher price or lower price than market. So these are the 7 calculators which we have, and probably in next 2 to 3 months we'll come up with 3 more calculators which will help you take much more better decisions.
Okay, and how can they access this? Puneet, would you like to tell them how to reach these calculators on MagicBricks?
Just go to advice.magicbricks.com, and in the first screen itself you will be able to see finance tab. Just click on that tab and you will have access to all these 7 calculators. Basis your needs, you can just click on the link of which calculator you want to use, and then you can use it very easily.
Right, consumers, go to magicbricks.com, click on advice, click on the financial advice, and you will be able to see the calculators. Use whichever is most useful to you. There is a query from Pavan Handa from Hyderabad who says, how is depreciation value calculated and deducted from market value for 10 to 15-year-old property? Now, we've always been telling everybody that property is an appreciating asset. But after 10 to 15 years, if it is depreciating, how do you compute the depreciation?
So per se we don't, so per se we don't compute the depreciation of a property, but it is calculated basis again rates and trends data. So essentially, if a property was bought 10 years back and similar properties, the ask price is comparatively going down. So basis that intelligence, we can predict the depreciation at a project and locality level. So that can be done through rates and trends and the current data which is coming onto MB. So essentially, we have last 8 years data, and we know the properties, their construction, I mean the ask prices which were there 6-7 years before, and what are the current ask prices for a particular project and locality. And basis this data, we can tell you. But 10-15 years is a big, a bit long duration. So right now we have tools to estimate the depreciation of property for close to 7 to 8 years. So probably I think 2 to 3 years down the line, we will be able to actually tell for properties which are more than 15 years. So right now, up to 8 to 10 years of properties, we should be able to tell you some accurate values.
Right. Pavan, if you're not able to access our calculators or need further advice on how to use them, you're welcome to come back to the Magic Bricks forum and post your query here, and we'll be happy to take these queries and answer them, answer them ourselves, and also get it answered by other industry experts who regularly come to Magic Bricks and interact with consumers. And we will definitely get back to you on this one. There is Shekhar from Ghaziabad who says, I have invested in commercial property in Noida. The builder is giving me 12.5% assured return till possession. How this income will be computed under house property or income from other sources? How do I compute this? Shekhar, Magic Bricks is a residential property portal. We don't have a commercial portal running right now. What we can do is you post your, we'll take your query and send it to our taxation experts and let them answer it. Puneet, would you like to give him some advice here?
Are you sure?
So Jeffrey, I would love to answer this question here. So as far as the assured income is concerned, if they want to use this ROI calculator, they can put it under the rent per month. Calculate how much money they are calculating per month, put it under the rent per month, and this calculator will give you a ballpark figure for a commercial property as well. Because all the figures I'm sure the user is having right now, which is loan or cash purchase price or what is down payment and etc. The only confusion is for the assured return, which he can put in the rental per month.
Yeah, and remember that this will not be counted as income from house property. It is commercial property, which is why we will get our experts to answer your query, give you further advice beyond what Ayush has given. But yes, the ROI calculator will allow you to compute how much income you have already received so far and how long you should hold your property. Let's go on to the next question. Ratnesh says, will I be at a loss if I invest in a 3 BHK in Gurgaon, as it is a very expensive market? How should I calculate the risk and benefits of the Gurgaon market? Ratnesh, there are two things that you have to consider. While Gurgaon has been traditionally a very expensive market, and there are many factors which keep it expensive. The developers are not able to build small units because the density norms don't allow them to build smaller units. They have to build upwards of 1200 square feet or so on, or if they build smaller units, they have to offset it with larger units, which is why you haven't seen very many small units coming up in Gurgaon. However, the Haryana government has come up with a affordable housing scheme where developers are allowed to build smaller units, and there the houses are available for a maximum value of 4,000 rupees per square foot, and this will hold for the next 5 years. As a result, a lot of private developers have started launching affordable housing units in Gurgaon, so you will be able to invest in those, but those are much smaller units and not the 3 BHK that you're looking for. Now, what you want to know is, if you buy a 3 BHK, will you be at a loss? The values in Gurgaon have not risen, or in fact, in many cases, have dropped by at least 10% over the last 2 years, because it has been a very flat market. At this stage, when the markets are down, if you invest in the Gurgaon market, because there is very steady demand in this market, and after this bear phase where people are not buying, when actual end user demand kicks in, there will be a lot of demand. You will not lose money on this market. But there is another factor that you have to consider, that there is a lot of stock that's coming in this market and stock is getting completed. So please do not enter the Gurgaon market as an investor if you have a short-term horizon. Your returns will only come after the next 7 or even 10 years. If you have that kind of appetite, you should enter the Gurgaon market because it is a very high demand market, and 3 BHK is the category that is most in demand. Now, Puneet, would you like to take him through how he can assess his risk?
Yeah, sure. So as Jashi rightly mentioned, that if you have a long-term horizon, definitely go for Gurgaon market. And here also, I mean, whenever you're using this calculator, just ensure that, I mean, when you see the ROI, just see it for more than 7 to 8 years. And basis that, take the decision, because ultimately if you're looking for return in next 3 years or 4 years, it's going to be very, very difficult. So the price of the property, so future price of the property, you can use it after 7 to 8 years, not for 2 to 3 years, because if you do it for 2 to 3 years, it will definitely show not to invest right now.
Okay. Actually, you should not invest in any property in any market for less than 5 years. Property is, like I said earlier, is not a short-term investment. It has to be a long-term investment for you to get better returns. The best returns normally come in 7 to 10 years, because that is when the property reaches its peak. For the first 4 years is when it is being developed. Then at possession stage, the values go up somewhat. After full possession of that whole unit, and when the facilities around the unit have evolved very well, it becomes a high demand unit, and at around 7 to 8 years, you get the best value for that property. It holds till about 10 years, and after that, there is a slight decrease normally. But if the property is very well maintained, that price can hold for a longer period of time. Let's go on to the next question. Mehek wants to know, should I invest in properties in Greater Noida? Will it pay me back over the next 5 years? How is the market performing currently? Mehek, the Greater Noida market has a lot of stock coming up. So does the Noida market. So when there is a lot of stock, you will be able to get a good, negotiate a good value for your property when you're buying the property. But remember, when there is so much stock in the market, the rate of growth of the property values is going to be subdued, and you will have to look at a much longer horizon of about at least 10 years. There are two things that make Greater Noida an attractive investment destination. One is that the metro work is going on very fast. We did a recce of the Greater Noida market. The metro work is going at breakneck speed, and when the metro comes, whatever the values on the ground are, normally there is a jump of about 10 to up to 25% over a 2-year period of time. So you can get better returns if you invest today. The next thing is that you will be able to get good rental returns while you're holding the property, waiting for the leverage value to go up. When the property is, when the metro arrives, the commute from far off destinations becomes easier in that location, and the rental values register a jump. These are two things that will help you compute whether you should invest in the Greater Noida market. Puneet, you have anything to add?
Yeah, specifically in Greater Noida, as you rightly mentioned, on site also we have seen trends of supply being very, very heavy and demand right now being stagnant. But if you compare it with last year, it has incrementally go up by 3 to 4%. And we believe, I think, like you said, probably in the next 2 years, 12 to 18 months, the demand should go further up, but the supply is very, very high. So if you're planning to invest in Greater Noida, I think you should also take into consideration from buyer perspective, he will have a lot of options to choose from, and comparatively compared to other locations, you will have a very less bargaining power if you are planning to sell out in next 3 to 4 years.
In fact, you should hold for at least the next 7 to 10 years in Greater Noida for best returns, because the metro itself will take another 2 to 3 years, and after that only will the livability index go up, and that is when your values start going up. There is Alok Johari who says he's a businessman from Noida. He says, how does one compute the value of a building to be added to the circle rate for the purpose of valuation for registration in Noida? Have you done anything on circle rates yet, Puneet?
So last week we had launched a circle rate calculator for 4 cities in Delhi NCR. Mainly for Delhi NCR, we have launched a stamp duty and circle rate calculator, in which whatever circle rates are mentioned on MCD sites, we have structured that into a proper format, and there is a calculator in case you have a property value in mind. The calculator tells you about the circle rates. So right now it has not been integrated in advice.magicbricks.com. So what you can do is, if you're searching for property say in Ghaziabad, just go over there, and there along with the property price you will see a link, see all inclusive price. Just click on that link, and there you will find a link for stamp duty calculator. Just click on that, and you will be able to input some parameters like the current location of property and price of the property, and basis that the location and price and the kind of property you have, whether it's a flat, builder floor or plot, and basis that it will tell you the circle rate, stamp duty and registration charges which you have to pay.
Right. And consumers, we are completely out of time. It is 1 o'clock and we have questions pouring in. Let me assure you that the ones that have been answered will be available on the website by tomorrow. But the ones that have not been answered, we'll make a special effort to answer all the queries and add those to the transcript of the webinar. We would also like to let you know that all these queries are regularly posted back on our forum. So do come back to the forum and check out the property values, the queries that you have. If you found your answers, look for what others have asked. If you don't find those answers, we promise you that we are making the best efforts to get all your queries answered on the Magic Bricks forum. Thank you so much for joining us, and Puneet, if you would like to make any concluding remarks.
Thanks everyone. So we are delighted with so much response, so much questions, and we look forward, and in fact we have got a lot of inputs from this conversation, and we'll try to especially incorporate that some bits for NRI and some bit for customers, so that this calculator in itself become far more easier for them to use. And in probably next couple of months you will see this calculator on mobile in the form of mobile apps also. So you can use this on the go while evaluating a property on the ground. You should be able to use it then and there only. Thank you very much.
Back to you, Neha.
Yeah, thanks for the insightful presentation. I'm really thankful to our guest speakers for conducting this webinar. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. The recording of this webinar will be available on Magic Bricks by tomorrow. Thank you all. This is Neha Nagpal, your moderator, signing off.
Thank you. Have a great day.